here and beyond. Get ready for raising the cane. Like that, because if it's a good investment wherever it is in the world, we're going to do it.
Exactly.
If we've all voted, the majority vote. And so it's important that you have your principles and your foundation of what you're going to invest in, how you're going to invest, what you're going to invest, who's going to invest, whatever. So have that together up front. So there is some homework that you have to do. Your core principles have to be solid. Now let's talk about what we invested in, like sectors like we're heavily involved in real estate investment trusts.
Yes, we are. Yes.
If you don't have a lot of money to invest in real estate directly, you can invest in REITs, as they call them, real estate investment trusts. Why REITs? Because they pay a nice dividend. We invest in companies that have nice dividend payouts. Some are $5 a share, $3, $2.
Yeah,
nothing under
affordable.
Yeah, nothing under a dollar. No 50 cents a share.
Stocks.
Bull stuff like that. So we have various stocks, and so we're looking to expand our investments, and we're gonna have a follow-up podcast to show perhaps the different types of investments that you could do, but. We've invested in a lot of various type of industries over time. We do have Disney. Give Disney a plug.
Right.
Okay, we do have Disney and McDonald's, two big heavyweights there. And so if our club did nothing, we have made dividends annually. Let's say it's dormant for a year, which we had. We went dormant. And we've done nothing at certain occasions in the past where that the dividends kept rolling out. And so that's a good benefit of dividend. And even when the stock depreciates, the dividend's there still. Now, because of the pandemic, a lot of them cut their dividends out or reduced it or suspended it. So I won't name those companies. But it's rightfully so. They weren't making money. They were shut down. So why would they continue to pay $8 a dividend? So it makes sense.
It wasn't prudent or reasonable.
It wasn't prudent.
Yeah. Right.
And so once you do all of these steps, and all the clubs are different. You have different what you invest in, how you operate. But there's certain core fundamentals you need to adhere to. The next step is to actually invest. A lot of people are scared to invest. So you do all this work to get this club together. Invest. Do it.
Yeah.
Take the money, give it to the broker, buy the stock.
Yes. And not everything automatically or continually works out. Remember when we put money into Kookaroo, for example?
Yeah, they're out of business. They were a chicken company for you folks.
I remember.
Kookaroo. The chicken was originally good, and there were potatoes. Wow.
That was the best.
Wow. I went to the first one in Santa Monica. Then they had one in Yorba Linda on Imperial. I remember it next to the Richard Nixon Library, Presidential Library. And that chicken was good, and potatoes. Oh, God, it was good. It wasn't that many of them. They were on the stock.
2 in downtown Los Angeles.
Yeah, I don't know who recommended that stock. But
chicken.
They went bankrupt, and we lost all our money.
And that was after they changed the formula.
You know what? Those are the risks, and that's the fun thing. I mean, you have to take risks. If you don't take risks, then you don't win.
Exactly.
So you don't pin the tail on the one that recommended a money losing stock that went bankrupt and you lose all your money. You just forgive. So there's We forgive you, Maurice.
Well, a faint heart never win glory.
We forgive him. So it's a so, but you know what? This is a good point. I'm glad you brought up kookaroo because you can lose money, folks. I know you're watching a lot of YouTube videos about money going up on up. That's only one side of the coin. You have to be careful in your selection. So, like we don't believe.
Percentage.
Yeah,
The
percentage.
percentage
Percentage.
that you put in.
Don't put more than you're willing to lose.
Exactly.
Now we have all the confidence in McDonald's and Disney. We own several other stocks too, and so we want maybe one day we'll get into specific. What do they own? What do they own? You do your homework, do your research. There's a lot out there, a lot of magazines, a lot of YouTubes to give you idea, and other sources, news sources. So do your own homework. Again, we're not giving investment advice. Okay.
But I will say, don't borrow money to invest.
Don't do it.
Please.
Absolutely.
Don't do that.
You know what? A lot of folks out
That's
there,
red.
you don't have enough
That's
money.
a warning.
You don't-
Warning.
Don't do that.
You don't. Yeah, you borrow money,
Yes.
and I know we may not be popular right now with the broker companies who lend you money and
Yes.
stock
Right.
on margin. You know what margin is? You know, they may lend 50% of investment.
Yeah.
Don't do it. Even if they lend 100%, don't do it.
Don't do
Yes.
Because the wind blows both ways, actually 4 ways.
it. Yes.
North, east, south, and west.
That's right. The cardinal
Yeah,
directions.
yeah.
Goes up, yeah.
Yeah.
You know, like, don't do it. You're just you're just asking for something, and it's bad. So don't do that. Don't believe the lies of some of these brokers and say, hey, just do it, kid.
No.
They've been making money every year. Yeah, they make money until they don't make money.
Right.
So you don't know. We were the original investors in the Marvel before this Marvel, and they
Before.
went bankrupt.
That's right. Before Disney took
Before
over.
Disney took over, we invested in Marvel Entertainment, and we lost all our money. All of it. How much? All of it. And so when they came back to life, the second incarnation of Marvel that was purchased by Disney, we're like, I don't know if we're going to invest in them now, but you know, you things happen. So that's why we didn't have all our eggs in one basket. That's why we survived as an investment club and individuals.
Diversification.
Yes, that's right. Diversification.
Yes.
Diversification is how you say it.
Exactly.
I don't know how I left the FI. Diversification. Diversification. So, but anyway, see, we're having fun here, and that's what you should have fun when you're talking about investments.
Yeah.
But if you borrow money, and we wouldn't do that unless you're seasoned and you're an expert and stuff like that, and you can afford to lose everything and still live another day and eat another day, then do it. So
Or
you
take
don't.
the money out before.
Take-
I mean,
yeah,
if you're
Yeah.
dedicating time
So
for
True.
that.
True that.
yeah.
To-
So anyway, but it's important to keep a mind open to invest in different things, and also we as a club also invested in like private, because of the Jobs Act that President Obama signed. We the non accredited investor now can participate in private venture capital, private equity, do the crowdfunding sources, Regulation A and Regulation CF. And so we can invest in private companies. So those are another avenues too, but that is the riskiest thing you can do. So again, you see your lawyer, your accountant, your broker, who are all licensed folks, not us, because we're not licensed and we're not giving you advice. We just encourage all our watchers and listeners to seek wise counsel before putting all their money in these different investment avenues and opportunities.
Yes.
So
Yes.
it's important you do your homework, and you can be enriched and get wealthy doing this. We've been in this a long time, 3 decades, and so we still don't know it all, because you don't have a crystal ball. You don't know. Do we believe Disney and McDonald's will go out of business in the next 5 years? We don't think so. Because you folks keep going to Disneyland, watching their movies, going to McDonald's and getting them burgers and quarter pounders, so we very much doubt it.
Disney stores.
Disney stores and
Yeah.
all that memorabilia you buy when you go in there.
And it's worldwide.
It's
so-
worldwide
true.
operation. So, do we like Disney? Yes, as an investment, yes, and as consumers, we're consumers too.
Yeah.
So Peter Lynch, he was a guru back in the day when I was a stockbroker, and he used to always say, "Invest in what you know." And Warren Buffett says that too. Invest in you visit these stores, you buy their products, and then that should spark something for you to do your homework and research to see, well, wow, I like this, my friends like this investment, so perhaps it's a
See
good
the trend.
investment. So do your research,
Yeah.
get your homework, and look on the government sites and do all your due diligence you can. And it doesn't take, I was going to say, it doesn't really take a lot to do this. You just have to be, if you're committed, because you'll do it with gusto and enthusiasm.
Yeah.
Yes.
But yeah, is it a little job to do research? Yes, it is. But treat it as fun and a way to educate you and your family and get your kids investing. Whoa, you hear that?
Yes.
What's that sound?
It's time to go. That's what
go.
time to go.
Yes.
It's been a pleasure, and remember to subscribe to our YouTube channel.
Wow. What was that about?
Subscribe to our YouTube channel. We're on
Too
Twitter,
excited.
Facebook. We're on iHeartRadio. We're on Spotify. We're on Stitcher and Deezer and a whole host of other platforms. We thank you for giving us your time.
You can't
Don't
do it
forget
without
to
you.
share. Don't forget to share and like us.
Share and like.
Sharing like it's raising the cake.
Spread the word.
Yes.
Woo!
Whoa, whoa, whoa. Whoa, whoa, whoa.